Hey everybody, Brian here. It's Thursday, the 6th of August, and the S&P 500 lost a little less than 1% today. As we've noted, with these moving averages crossing back and forth and the fact that we are in this bigger range, we're not really expecting a big move in either direction. However, we did break below important support today, two levels actually, and that support later in the day became resistance here. That was actually the lows from Monday right in here. And we have the week to date volume weighted average price up here at 209.50 right now. So the sellers, are stepping up their activity a little bit. This is the year to date volume weighted average price. And you can see we came down and tested that today. It's also approximately equal to the 200-day moving average. 200-day moving average is 207.30, and our low today was 35 cents above that. So intermediate term, we're guilty till proven innocent. This prior little band of support we'll now look at as resistance in the market as guilty till proven innocent on the intermediate term as long as we remain below that level. If we rally up a little bit tomorrow and then fall from there, then I think it's likely we would see a short opportunity. As I pointed out several times in the trading room today, this has kind of been the little triangle that we're forming in here, and this basically being the midpoint of that triangle. We're still not broken out as long as we're below that 209 level, though. We want to look at this market with a heavy eye of caution and suspicion. And if we break down through today's lows, then it's likely we'll continue down towards the next level at about 206.5. It still remains tricky though because we're in this bigger range and we do still have that 200-day moving average right in here. So it's not a good time to be aggressive. We are seeing though more selling each day. It seems as though we're getting a bad advanced decline line. It improved a little bit in here today, but still obviously skewed heavily towards the losers with 1,800 of those compared to just 1,200 advancing stocks. The Nasdaq lost twice what the S&P 500 did, and what was looking encouraging yesterday is now looking a lot more like a failed move potential. We're at this 50-day moving average. The year-to-date volume weighted average price down here at 107 looks like it's possible to be realistic. And something I really wanted to point out is, as we've been noting, the weakest group has been the semiconductors. If you look at this chart where it is right now, and I think I'll probably do a blog post about this, that this prior resistance, then we fell into this band in here, and we had a little false move higher where it looked like it was going to continue higher. The semiconductors kind of the same thing. We broke out, we pulled back, acted like we were going to continue to move higher here, and then just got destroyed. So this point right here is very similar, I think, to where we are right now. Now, I'm not calling for a breakdown. I'm saying be aware of the possibility of that. However, the biggest, winning group this year has been the biotechs, and they lost 4.5% today. So kind of the same type of story that we have the potential from this failed breakout. Here comes a fast move lower. We found support along that 50-day moving average in the biotechs numerous times. Today we broke down through it, and we are into an area where we've seen some support. So perhaps we get a bounce from here, but I would be highly suspicious of the biotechs moving forward from here. They look, again, very similar to the semiconductors did and very similar to the way the NASDAQ 100 does right now. So I think we're in a high danger area. The potential for reward is diminishing, and risks seem to be increasing on the downside. The Russell 2000 closed below its 200-day moving average. Its year-to-date volume-weighted average price has offered resistance in here recently as well. And of course, we have these lower highs and these lower lows. So the Russell 2000, as it is, we said, below this 124 level was the key. It remains guilty till proven innocent. Now we broke another important level in here today, and this prior support, 121.5 to 122, is likely to offer resistance. I would not be interested in getting long the Russell 2000 for anything more than a day trade if it remains below 122. So, at the end of the day, let's just go back to the SPY for a moment. We did get back up to the VWAP. It seemed like we were going to break down in here this afternoon. I mentioned that these were the key levels to keep keep an eye on that if we broke that, basically meaning this, excuse me, the stop would be right around in that area. And again, it's this prior band of support in here. So all of these markets are acting vulnerable, including the financials, which seemed as though they were going to be able to hold some strength here as it broke that 25-30 level, but it failed to hold that level. And now we're back down towards the lows that we have seen earlier in this week. The year-to-date volume weighted average price way down at 24.40. We've got this trend line as well, kind of in the same area on the daily time frame. We've got that 50-day moving average in here. So this group doesn't look as bad, but we do have to again consider the look of this action right here compared to the action that we saw right over here in the semiconductors. Let me just clear that off for you and kind of redraw it. So we saw the breakout to new highs. It pulled back deep to the 50-day moving average, made a lower high, and then it made the higher high. So it seemed like maybe things were on easy street, and then it got slammed. Now in the financials, kind of the same story. It broke out to a new high, pulled back, tested that 50-day moving average, looked like maybe it was time to get going once again, and now we're in the danger of a move similar to this one. I think that initially, if we do break these levels in the NASDAQ, then you have to look at the measured move and say this is 114 and a half down to 110, let's just call it, so 4.5 points. We would measure 4.5 points off of this high to come up with a price objective of about 108 and a half. I realize that's not precise, but the idea is that this move will generally equal to this leg lower. So going back to the financials, the move from 25.60 and down to 24.80, that would be a drop of 80 cents. And we would measure that from this point right here, giving us a price objective down near about $24.50 a share. It is a dangerous market environment we're in. Keep that in mind. Apple was up 29 cents. It's still a mess. I don't see any reason why anyone would be buying this for anything more than a day trade.